Hey guys, it's Jeff Trapp here with the Jeff Trapp podcast, and I'm so glad that you've decided to join me today. We've got a jam-packed episode, and we are coming to you live from our new office here at the Star in Frisco, the Dallas Cowboys headquarters. And I do have an awesome view on the other side of this camera. Unfortunately, with the lighting and everything, it just didn't work out for today's podcast, but we'll get some evening podcasts going where we can show you the view of the new office and the new office space. But if you're just joining us for some tax tips, we've got a great episode. And we are coming up on that September 15th tax deadline, which is, about 10, 11 days away. So if you have a S corporation or partnership, you're going to want to go ahead and get those taxes filed. If you are on extension, the penalties for not filing are fairly steep, and they are per partner and per shareholder penalties. I believe about $205 per month for those partners and shareholders if you don't file those taxes on time. And of course, we want you to be a good steward of your money, save as much money as possible. And so it's imperative that you file those taxes on time, so do something to get those taxes filed on time. Well, today I want to talk to you about the Kamala Harris tax plan. It's taken several weeks for them to formally release something in terms of a tax plan. And, it's a very interesting proposal because it bakes in a lot of the things that President Biden has tried to do over the last 4 years. It also increases some of the things that he was trying to do when it came to increasing taxes on wealthy individuals as well as business owners. So, there's a lot going on here in terms of taxes. And so what I'm going to do is I'm actually going to look down at my notes because, there's a lot going on when it comes to tax law and tax law changes. Now, as you know, President Trump, former President Trump, made some big, big tax changes at the end of 2017, the Tax Cut and Jobs Act. Well, those are set to expire at the end of 2025, meaning the tax rates would go up across the board for everybody. The higher standard deductions would go away. The 21% corporate income tax would go back up to 35%. And the big one is the estate and inheritance tax would go from roughly $27 million for an estate down to half that, about $13.5 million. And so a lot of people with very large estates will get taxed. And, 13.5 million between husband and wife, if you have own property on the coast or in California, New York, very, very easy to get to that wealth number. And so it's important to strategize how you're going to keep more of that money. So how would that all change under a President Harris administration? So Vice President Harris would like to create additional tax cuts for those who are making under $400,000. They want to increase the child tax credit. They want to provide first-time home buyer tax credits. So you get a tax credit if you're buying your first home. They also want to incentivize builders who build first-time homes. There's going to be a greater focus on green energy and green energy tax credits. And so, this is some highlights of the Harris tax plan. Now, on the business side, they would raise the C corporation tax rates from 21% to 28%. And then for those who are making over $400,000, they would like to implement a 39.6% tax. So that's the former tax prior to the Trump tax cuts. So there'd be a higher tax rate there. And then also tax capital gains at ordinary income tax rates for wealthy individuals at 39.6% and raise the net investment income tax, which is so lovingly called the Obamacare tax from 3.8% to 5%. So that would do a lot of things for investors and how they invest their money when they sell appreciated assets, such as stocks, real estate, businesses, things like that. Now, the big thing that's been in the news lately is the taxation of unrealized capital gains. And what does that mean? So if you buy a stock for $100 and it goes up in value to $150, but you don't cash out that stock, you could potentially pay tax on that $50. And that's why everybody's going crazy in the news, right? Oh, we don't want to pay tax on that unrealized capital gains. Well, no, what they're stating is that if you pass away, that would be a triggering event that would cause you to pay tax on those unrealized capital gains. So it wouldn't be across the board for everybody. And this is really targeted at those making over $1 million who have these appreciated assets, right? And these are your folks that most likely are going to have to pay estate tax. And so when you die, if that stock is worth $150, your estate would pay tax on that $50 of unrealized gain, but they would also then get a step up in basis to that $150 when they go to sell that stock again later in the future. And the way the law currently stands is if the stock is worth $150 when somebody passes away, you get it a step up in basis to $150. You don't have to pay tax on that unrealized gain amount. Now, which is something that's even more interesting when it comes to this law, is it sounds like is they want to ratchet down the estate tax from $13 million for, a married couple down to $5 million, or is it going to go down to $10 million? We don't know. There hasn't been clarification on that, but it sounds like they want to cut the estate tax even further. So really, really interesting proposals out there from both administrations. And, feel free to vote for whoever you want. I do think when it comes to taxes and politics, a lot of these things where, Vice President Kamala Harris wants to tax wealthy individuals or wealthy estates even more, is going to be really, really hard to pass unless your House of Representatives is blue, your Senate is blue, and your presidency is blue. Now, I've heard rumblings that, that the Democrats have the votes they need to change the House from red to blue. The Senate has been blue for a while. So could this theoretically happen? Yes, but it's going to take some time. It would either probably have to happen in her first 2 years of her presidency or the last 2 years, depending on if they can get those executive branches to change. And a lot of these things I feel like are being set for political posturing and for votes, right? If you say you're going to tax people making over $400,000, well, then you're going to get a lot of people that want to vote for you that are making under $400,000. And that's where the majority of the votes lie. So when it comes to taxes, politics, finances, there's a lot of things that are being said that a lot of times don't actually get done. And there hasn't been very many large scale tax changes in my lifetime. And, we covered that a couple months ago, I believe in July, when we talked about taxes and politics and the history of the changing tax code. And it seems like every 10 to 15 to 20 years as we get some tweaks to the tax code. But really, we had the Trump tax cuts, big change there. We had the Bush era tax cuts, and then we had the Ronald Reagan tax cuts, right? And in between there, we had some incremental hikes. We had Obamacare and a few other things, but the tax code's been relatively the same from about the 80s till 2017. 2017, when we had the Tax Cut and Jobs Act. So if you found this episode helpful, if you're wondering what's going to happen about the tax code, you want to know more, you want to protect your wealth even more, feel free to book a call with our team. We're happy to help out. Make sure you sit down with your tax strategist and your financial planner to make sure you're doing all you can do to keep more of your hard earned money. And if you enjoyed today's episode, please like, share, and subscribe. Look forward to chatting with you again next week. Once again, I'm Jeff Trapp, the Tax Planning Pros, the Jeff Trapp Podcast, and thanks so much for joining me today.